I think that's a very tough position to be in as a founder, where your fate is a little bit out of your control. I've been there when I've been building. I've seen teams kind of do that where really want you build this great infrastructure, and you're like, well, I need the assets to show up, I need the liquidity to show up, and there's only so much of you can really do to make that happen. It's sort of like pushing on a string.
Your role at Dragonfly Ventures, can you give us a little bit of a breakdown into what your focus areas are, what you do, and basically what drives your convictions as an investor?
Yeah. So I'm one of the GPs. I've been in Dragonfly about 6 years. Dragonfly, we're a crypto venture fund, so we're like a traditional venture fund in that we have this really long fund life. We focus on kind of seed through Series B startups. We back them early. We help them build and help them do whatever it is they're trying to do. But with the twist being that we only focus on companies related to crypto. So that can be new blockchains, that can be exchanges, that can be developer infra, that can be wallets, DeFi, whatever it might be. Sometimes it's maybe only an equity investment, sometimes maybe it's an investment with a token, but we sort of do anything that touches crypto in some way. For me personally, my background, I started out my career, I was an engineer at Apple for a little bit, and then I was an early product manager at Instagram. So spent a lot of time in consumer and then moved into crypto. I ran product at 0x for 2 years. So ended up doing a lot of sort of early DeFi stuff before DeFi was even around. We just kind of thought it was like, oh, these random projects that ended up interacting in different ways and kind of becoming the whole ecosystem. So as a result, I ended up doing a lot of consumer and DeFi investments at Dragonfly, but as a fund, we're all kind of generalists. We sometimes do a little bit of everything, but it's been great having the partnership together.
So did your early stage tech experience sort of prime you for what you evaluate today?
Yeah, I think in some ways it's easier to evaluate companies if you've been at an early stage startup, or you've been a founder, you've worked as an operator. You kind of know what to look for, you know what a great company looks like. Two, I think it maybe gives you some insights into some of the problems that people in the space face of, hey, if you're a developer, you kind of know what the pains are of being a developer. If you're working data, you know what the pains are of doing crypto data. But also I think it just gives you some credibility when you're interacting with entrepreneurs, which is a large part of being a VC. It's a lot of kind of bedside manner. It's a lot of kind of strategy work, things like that. And it kind of gives you your word a little bit more weight if you've been there before and you've done it before. And I think that's a large part of our DNA.
Does that disconnect exist more broadly within the VC space in terms of those that hold the capital don't necessarily hold the expertise to evaluate what they're looking at in as granular a detail as you might be able to, having been on that product side?
Yes and no. I mean, I think certainly it's a very popular path to go from operator or founder to VC. But a lot of the most successful VCs, not even in crypto, but generally in tech, have no operating experience. And I think it is something where you look for people who have a lot of intellectual honesty, people who can learn really quickly. And I think I'm always impressed by, I think when I meet some of the top VCs, like how much they know about these different areas where they really have no operational expertise, but I think they're just hungry enough to be able to ramp themselves up and learn and probably ask a lot of questions and from founders as well.
So if we're looking at the industry at large today, 2025 has been a pretty big year. We've seen a lot of regulatory progress. We've seen sort of this stablecoin boom that was in many ways a long time in the making. We've sort of seen this DeFi 2.0. We've seen perp dexes arise out of everywhere, and we've seen prediction markets flourish as well. So there's a lot that's been going on, but then we contrast it to last week where we did see a bit of what we called a mass liquidation event. How do you reconcile all of these moving pieces in the market? And are we in a great season? Are we in a good season? Or are we in a bit of a shaky situation?
Yeah, I think crypto is funny because it's always maybe a little bit of combination of both, depending on where you are in the market and kind of what your experience is. I think as far as last week goes, there was this sort of mass liquidation last weekend, and I think when it was happening, I personally was not super nervous. I think I've kind of seen so many things happen throughout my experience in crypto, and usually it's more worrying because you don't know where the bottom is, right? Like when COVID was happening, when FTX was happening, you don't know what the next leg is. You don't know what's happening in the future, and so therefore there's sort of this like bottomless pit that you're worried about. This felt like, okay, it was idiosyncratic. The fundamentals are actually quite strong. There's no like kind of wall of worry you have to climb, as they say. And so for me, it was not that big of a deal. And for venture too, operating on this long time horizon, you get to zoom out a little bit, and it doesn't matter, hey, if your returns aren't as path dependent, where it's okay to have what may have been a drawdown 1 year and then a gain another year, because hey, on a long enough time horizon, if you're correct, your portfolio will do well. And so I think that's one reason why I like working in venture too, is you're sort of this patient capital that's sort of dedicated for founders. And so it's easy to kind of get distracted in the markets in crypto because things happen so quickly, things go liquid so quickly. But venture is in some ways kind of a long game and a slow game.
And I think also, if this is your first market flutter, your nervous system is probably going to collapse. But if it's your fourth, fifth, sixth, you sort of become accustomed to what to expect. And you know that what's going to happen when it boots and rallies, and that effectively it will come back. And it's less about the conviction of whether the market's going to disappear overall and more about how long it's going to take to bounce.
Yes, I think that's right. And I think, this time around too, in earlier cycles, I think there was always maybe a little bit of a question in the back of a lot of people's minds of like, hey, how real is this? Is this just an idea that we have that isn't going to pan out? Obviously, if you've been around tech, that there's a lot of ideas that end up kind of going nowhere, or maybe 10 years too early. And definitely, I've seen that happen in different cycles. This time around, I mean, when you zoom out, there's just like so much real activity happening, incredible companies, incredible metrics, and huge user-based growth, huge revenue growth. And so it was, again, there wasn't that sort of pit in the bottom of my stomach where I'm like, oh no, you point to sort of these very real metrics and these very real products, and hey, maybe you see a little bit of short-term volatility, but it's not something I would kind of lose sleep over.
So what are those new key product innovations that you think have really set the foundation for the market to always stay above that line?
Well, I think you touched on a lot of the big trends this year around stablecoins, around perps, around prediction markets. I think I look more broadly at just like the overall acceptance and understanding of crypto as an asset class and as an industry. I mean, you look at a very simple level, I mean, the Bitcoin and ETH ETFs being the most successful ETFs of all time. You look at overall corporate adoption of stablecoins for payments, stablecoins for treasury management, just continues to go kind of up and to the right, and it's really hard to kind of unwind something like that as quickly as it's being adopted. You look at, like I said, this changing regulatory environment, and at least in the U.S. also a view that, hey, stablecoins are about sort of national security and national strength, and needing to really kind of invest into those as a way to upgrade the entire financial system. I also just look at overall how mainstream actual usage of crypto applications has gotten. I think in one part, because so much has been invested in infrastructure over the past few years, and now you can use something like a wallet as a service product. Previously, that you can sign up with just your phone number, just your email, and it feels just like you're using a Web 2 kind of consumer grade app, but you're actually generating your own self-custodial wallet, and you're making transactions on chain. And even go back 5 years, and it was you want someone to use some sort of on-chain application. It's like, well, you have to get MetaMask or Phantom and get your seed phrase and write it down. And now you can sort of abstract out so many of the, I think, hairy parts of using an actual on-chain application. And I think Polymarket is like this really good kind of case study of how this stuff can kind of go mainstream, where for many people, that was really like the front page of the 2024 US election is, you sign up with your phone number, you can, effectively wire in money with your debit card or ACH. It's transitioning to stablecoins on the back end, and you're actually making trades on chain, but you wouldn't know that because it's all kind of gets.
So there was that layer of abstraction that people hadn't really become familiar with, and that mainstream users could finally interact with crypto without actually directly touching crypto.
Yeah, and I think that's probably what is necessary for this to continue going mainstream. Like, I think the future looks like now we see this new wave of sort of these crypto neobanks of, hey, you can wire in money, and we actually end up converting it to stablecoins and sort of finding yield for you on chain. And I think there were a few attempts at that in 2021 that ended up not really working. I think in part because it was a bit too early, in part because obviously there's not a really good risk management in place, and I think also there was not really the opportunity to have self-custodial wallets of this nature at the time. So, and everything ended up getting pooled into one big omnibus account at one exchange or one company, and then it blows up, and your money's gone. Here you can actually, retain control of your funds and still generate yield at the same time. So it's not like you're reliant on a company to hold onto your assets for you. And I think that's like a really big shift of, hey, imagine, your bank was more like an, email client where like, yeah, anybody can spin it up and it's safe and permissionless, but it's still interoperable with all these other sort of services. So that seems to be, in my mind, like one of the ways that the industry is trending.
I think another thing that we've seen is a lot more attention being paid to the innovations that are being built on a product level. And so we are more readily using the phrase product market fit, and we are more readily using the term revenue in our daily discourse. But what's also interesting is that while that's clearly progress for everybody as an industry, underlying that, there's still a competitive dynamic that exists amongst the protocols that these projects are built on. So how should these protocols be priming themselves or positioning themselves to still compete as infrastructure when the utility is sort of sitting in the project that's built atop it?
Yeah, I think this is actually like a very hot debate right now in crypto and in venture is, hey, where does value end up accruing? Does it accrue to these applications like a wallet or these neobanks that sort of this interface and has this end user relationship? Or is it the infrastructure that these sit on top of and they end up having a lot of the leverage? I think it really, frankly, depends on the circumstances. Like some applications or some protocols rather end up having some sort of virtuous cycle or network effect around liquidity, getting more liquidity, and therefore them having pricing power over other new venues that might pop up because they just don't have sufficient liquidity to be even usable. In other scenarios, really it looks more like software, not like a protocol. So it's like something you would get for free on GitHub. It's like open source software, which doesn't necessarily have pricing power, doesn't necessarily have the ability to have leverage over their users and therefore revenue capture. And I think in those scenarios, it ends up being the wallets and the applications that end up capturing more of the value. And I think for right now, we're in this kind of Goldilocks period where both are actually quite valuable. I mean, you see Axiom is a YC company, is pretty notable for being the fastest YC company in history to hit $100 million in revenue. So it launched in like February and hit $100 million in revenue this year. Pretty crazy. And really it's just a trading terminal sitting on top of a couple different chains and a couple different perp dexes. But it's powerful enough and useful enough that people are willing to pay fees to use it. At the same time, you see all these new chains, all these new protocols coming out that also have their own sort of revenue capture story. And so there's opportunities for entrepreneurs to build in both right now. In the long term, I think ultimately it's, hey, how do you sort of build that end relationship and that end brand with users? I think that's kind of the companies that will end up being able to capture most of the value.
Because I think there's been a bit of a wrestling match for founders or builders who are looking for a performant chain, but if it doesn't really have the market's attention, so it sort of comes at the expense of potential liquidity or potential users because they've just flocked elsewhere. But then we've also got this other secondary relationship where token holders are not the same as users, and that conflation is causing another level of confusion. So if you're a builder and you're looking for a protocol to build on, how do you assess where your best shot is?
Yeah, I mean, I think for people who really want to build something on a more of a core protocol, layer, I think it probably is that you're probably better off trying to scout out new territory on a new chain or new ecosystem or new geo and be the biggest one there versus really kind of getting into these very competitive markets on existing chains. And that tends to be where we've seen, I think, most of the growth or most of the successful new protocols. It's they scout out territory on new chain XYZ, and then they become the biggest, DEX or the biggest lending market or the biggest LST on that new chain instead of really trying to go after the incumbents on these existing chains. And I think we haven't really seen a successful new DEX on Ethereum in really many years. I think for new applications, kind of like you were saying, I do think the chain ends up getting abstracted out a little bit, and really it's more about which chains are going to have the performance requirements that you need for whatever application it is. If it's something really, with low throughput requirements or not really demanding latency requirements, maybe you can get away with something simpler. But I think more and more applications are ending up putting core logic on chain, which means you need something very performant, you need something very inexpensive, you need something with very low latency. But then, like you said, also something with sufficiently good liquidity, good developer UX is obviously a big part of it too. So, there's many different variables I think devs end up kind of trying to I guess, triangulate to get the right answer.
I think the other element, again, not to throw another curveball into this equation, that inherently makes crypto a little bit messy is that we started out of this, it was a very tribal dynamic. And chains were very competitive on a community level, more than they were on a tech level or a utility level or a product level. And some of that tribalism still exists. So where a builder chooses to develop their project, it doesn't matter how it sometimes doesn't matter how sophisticated their product is or how performant the tech that underpins it is. If they need to convince users to switch their allegiances in order to experiment with the product that they've built. So how do we break out of that thinking of having to pick sides in this very zero-sum dynamic that ultimately, personally, I think holds us all back?
Yeah. The tribalism thing is funny. I mean, it kind of goes way back. Like, I think of, it's sort of this part of the founding culture of Bitcoin was building in this kind of immune system reaction to new chains, and it was part of kind of the founding, origin, myth of Bitcoin itself, and that kind of carries through even in today. I think when I look at kind of ecosystems that have done a good job of building that kind of cult, like you said, I think of chains like Solana or more recently chains like Hyperliquid, and I think actually the things that they did well and partially how they're able to build that cult was by actually bringing on new users that just weren't as active on other chains. Like so many people I talk to who are very big in the Solana ecosystem, they have like never used an EVM chain, which to me is kind of mind blowing. But if you think about it, a lot of people who are also big in the Ethereum ecosystem, maybe they own some Bitcoin, but they're not big Bitcoin people per se. And I think Hyperliquid too, a lot of those people, hey, maybe they traded on centralized exchanges, but they weren't big on other perp dexes. Really, like this was the moment when they're like, yeah, I want to go on chain and trade on a perp dex. And so I think founders are oftentimes better off thinking about how do I bring on net new users and kind of build my own cult versus like you said, trying to pull off people from these other ecosystems is just like really difficult. And the good news is that, I mean, the overall user numbers for crypto continue to go up. And I think if anything, it's easier now for a lot of the reasons that we mentioned than ever before to build an application that can really go mainstream and bring new users onto crypto.
So then when we talk about a project founder who needs to build a net new consumer base or a user base, what advice would you give to a founder who's attempting to do that, who only really knows that they need to extract from what already exists within the crypto sphere?
Basically, how do you actually go and bring on net new users versus kind of just being...
It's not necessarily, like the onus isn't really on these projects. The onus is on us as an entire industry,
Sure.
Because we've stayed niche for a pretty long time. And I think this year we've seen a lot of institutional breakout and institutional investment into the space. But when it comes to the everyday usability of these tools that have been developed, there's still a little bit of a gap.
There's definitely more work to be done. But as a VC, that gets me excited. It means there's more opportunity for investment. I think when I think about things that have really, it's sort of this... I think a little bit of kind of like oil towns or like gold rush towns where it's like you have some sort of resource everyone comes for, and then that ends up kind of spilling into this bigger ecosystem, right? Like you have a bunch of people who come for the gold and they end up making jeans, and they end up opening a bar, and they end up opening a hotel, and those are kind of sort of trickle down from that. And I think when I look at what's happening in crypto, maybe even just more recently, I look at something like Pump.Fun. Pump.Fun, most of those users have never used crypto before. They came in just to use this thing, they onboarded, maybe they got set up with like a Privy wallet or something like that. And then they stuck around, and then they end up deciding, hey, actually I want to go, borrow on Marinade, or I want to go stake my soul, or maybe I want to go swap on whatever. And I think there's definitely something to that idea that like, if you have an application that ends up, again, kind of being able to go mainstream, that can really trickle into the rest of the ecosystem. And I think that's what builders really should be shooting for, is like, how do I build that thing that you can explain to your friends or explain to your parents, or hey, you can actually sell people on beyond the value prop of just being, oh, it's on-chain or it's crypto, but here's this cool new thing, this new experience that you couldn't really do elsewhere. Maybe it was, being able to send, cash internationally instantly without having to pay, 5-10%, or maybe it's, hey, you can earn, 5% on your cash with it, without having to, go to a bank. There's a bunch of new experiences like that, but it's about selling that end value prop to users versus sort of leaning back on it's decentralized or it's on chain, which I think is not really how you can go mainstream.
Because I think a lot of what we've seen within the Aptos ecosystem is a lot of very serious and longer term vision founders who need to find a way to ride out short-term market volatility and the attention-based economy that we're all sort of subjected to online in order to make it for their long-term goal. But that is a very difficult proposition in and of itself because our market doesn't really reward that at the moment. So how do we change dynamics within the market so that the serious builders with longer term vision and who are actually sticking to fundamentals can actually make it that far in the first place?
Yeah, I do think this is something that's not unique to crypto. I think a lot of founders in traditional tech, sometimes they have a big vision of where they want to get to. But the ones that actually end up being successful, the ones that are able to get there, are the ones that sort of are able to think in baby steps and do the next thing after the next thing and sort of think very simply. I think we were kind of joking before this about Amazon, and I'm like, Amazon famously started out as a bookstore, as an online bookstore, because it was something that was very uniquely well suited for being able to be sold online. They didn't try to sort of one shot, hey, you have this huge marketplace, you can buy everything. And I think in crypto, there's definitely, again, this sort of idealistic component, a little bit of this philosophical kind of component to why people often build in the space of, I have this big vision, I want to be the world's largest exchange, I want to be the place where all sorts of assets can be tokenized and you can trade them and borrow them. But you need to kind of start with, okay, well, on day one, what is the thing that you can actually ship and deliver to people that they actually want to use? And I think the most valuable companies in the space have even started that way of, think about something like Coinbase, it was literally just, we show up, you can buy Bitcoin. That's it. That's a very, very simple way to buy Bitcoin. Now, obviously, they're getting into, hey, maybe you can trade stocks, or maybe you have a credit card. We want to look like a bank. We can be a way to sort of send money internationally. But you don't sort of start with that. You start with what is the simplest MVP and kind of build up from there. So I don't think the advice is any different for crypto, which is you just need to be able to figure out what is the smallest sort of atomic unit of value you can actually ship and deliver to users and start getting feedback that way.
And so as these builders focus on those fundamentals, they spin up a product. There's probably a multitude of duplicate products that have very little market differentiation past the fact that they're potentially built on a different chain. How do they continue to differentiate themselves then, rather than just saying we're built on X protocol versus Y protocol?
But that is also very tough. I do think in some scenarios, there's sort of this, I think, tendency to sort of build it and then wait and hope they will come to you. And I think there are enough examples of that working that I wouldn't tell people don't do that. But I think that's a very tough position to be in as a founder, where your fate is a little bit out of your control. And I think it's frustrating. I've seen, I've been there when I've been building. I've seen teams kind of do that, where you really want this great infrastructure, and you're like, well, I need the assets to show up, I need the liquidity to show up, and there's only so much of you can really do to make that happen. It's sort of like pushing on a string. I think in that way, again, you are probably better off thinking of, well, if my long-term goal is to be the universal liquidity layer for this chain, how do I build that in a very, very small component today? And I think there's many examples like that where, hey, we start out by just offering very simple facility to let you do swap from X to Y, or hey, it's again, I think of traditional web companies where it's like, we're just going to offer this product in this market, and it's all going to be very small and managed and classically done in a very manual, do things that don't scale kind of way. I think as a founder, that lets you actually get feedback very quickly and you reincorporate that into your product roadmap. But B, I think it actually is a way to, there's sort of this path dependency in startups where, the companies that can actually start out and build up this brand and build this consumer base can end up cross-selling them and adding new products on over time, versus companies that kind of end up trying to be everything to everyone, I think kind of end up, sort of falling on their face, where you kind of end up being this kind of like nothing pile. And I think, a lot of the companies that we've been talking about, you know them for like one product that they do and they do really well. It's not that they do every single product all the time. And a lot of them have been building on and adding new features, but that's not really how they started. And so I think most people could probably benefit from, saying no and having more focus in their product and thinking about like, what is that single player experience you can have on day one with the product that actually delivers value.
So there's basically a danger in generalization.
Yes, definitely. Yes. I think investors definitely want to see, it's risky and I think scary to be very opinionated and sort of be able to say no to things. But I think that's ultimately what you have to do as a founder to kind of, like you said, you're one of 20 competitors on the market. How do you differentiate? It's by doing something that's very specialized that no one else can really do, or maybe by doing the things that other people aren't doing, and that inherently means making trade-offs and saying no in some scenarios.
Do you think that same logic applies at the protocol level? Because we had general purpose blockchains, and then we sort of have this new breed of specialized blockchains. And then to take Aptos as an example, it's positioned itself as a global trading engine specializing in trading and payments. So there is a focus area, but in terms of the infrastructure, it could still be applied to a broad variety of use cases. So is there still risk in overgeneralizing at the infrastructural level, or is that still sort of a neutral zone?
I think so. I think, well, for one, you have to think about kind of developer ergonomics. And, it can be true that you can build it in your protocol in a flexible or modular enough way to be able to support many different things. But in practice, and this is true for protocols and blockchains and open source software in general, is like most people end up going down one particular goal and path of they'll use a lot of the default options. You're voluntarily concentrated in a small number of assets. There's a particular sort of set of transactions or rules that people will end up using, and so it's okay to be a little bit more optimized and I think opinionated for those particular things. I think the other thing too is we've seen, I think, most of the success at least in kind of the DeFi space, be in protocols that also end up offering some sort of first-party experience. And it doesn't have to be such that everybody goes through your first-party experience, but there was sort of this idea in kind of, I would say, 2016, 2017 that you just build the protocol, you release the software, and the other people build their own interfaces and their own applications on top of it. And again, at maturity, that is true, and that would almost certainly be true that most of the volume on Uniswap does not go through the Uniswap front end, and that's by design. Like you want a nice, robust network of people who are actually using your protocol. But on day one, you still want people to be able to show up and try out the experience. They want to be able to swap. They want to be able to borrow. They want to be able to do whatever it is that you want people to do. And therefore, you need some sort of like demo experience. You need some sort of thing that allows you to actually, again, kind of take control of your own destiny and actually ship something and get feedback on it. And I think not enough teams are sort of. I think it's changed a lot over the years, and I think certainly it's a lot better now than it was 5-6 years ago. But it's okay to be kind of opinionated on day one when it comes to your product.
So to pull back for a moment and to look through your lens as an investor, how do you place your chips for the market as it stands today versus, I guess, the longer term future you're placing bets on?
Yeah. We were also saying right before this, I think we tend to be a little bit more bottoms up than other investors of really trying to back companies that are solving problems that we have or that we've seen or products that we really love to use. Whereas I think other VCs tend to be more top down of just like, hey, here's my bigger vision for this space, and here's where I'm going to sort of place my chips. And it's not to say we're not sort of forward looking, but I think we tend to be a little bit more realist and try to look at metrics and try to look at, hey, how things are actually functioning today versus maybe how we imagine them to be functioning. I think for us, one sort of thing I've always seen is like, it's like oftentimes people have the right idea, but like the timing or the specifics will be wrong. And I think oftentimes it's better to take like a less direct path towards the path you actually want to get to. Sort of, again, going back to this idea of like having a simple usable product on day one and using it to be able to pivot into the long-term thing that you want to do. I look at something like Athena where it's like, okay, long-term, you want to be this sort of global, all-weather, yield source, this sort of synthetic dollar. A lot of teams, tried this idea a long time ago, and they try to do it through only having it all happen on chain, only using decentralized perps. And you end up kind of getting stopped out because you're getting bad execution. There's not enough open interest. You just can't really build a synthetic dollar that way. And so Athena, took this path of, hey, maybe it's not totally all on-chain, all 100% decentralized today, but incrementally it's getting there over time. And I think that's like a good sort of case study of you can be a little bit pragmatic if it allows you to kind of get to this long goal and this long vision that you have. I think also the most successful investments I think we've made are the ones that are like not consensus at the time. Like the hottest deals, I think almost always tend to disappoint in some way. Either you're not getting compensated for spotting something early, and so it gets kind of overpriced, or hey, maybe there's sort of VC groupthink, and people end up kind of piling into the it's just a collective mirage of an idea. And I think the things that work are always the ones that are a little bit quieter, where it's like they're not the super hype rounds, so it's not the sexy new idea, but it's something that again is just like very practical. It's a product you like to use, you can see people using, or it's solving a problem that you have, and it can start out as this little toy and this little mini demo, but those end up being able to kind of scale over time versus the big companies are trying to like one shot one big problem.
So then from that perspective, what's the most underestimated innovation you've seen this year, and what would you say is the most overblown?
Well, I would say underrated. One area I have a lot of, I've kind of sort of a soft spot for is this kind of iGaming and like online gambling kind of space. It's an area that, it's really been around since since the inception of Bitcoin. There's like Satoshi Dice way back in the day. Bitcoin has obviously been big in online gambling. That's been historically had difficulty getting access to banking services. But I think now we're at the point where you can actually put a lot of this logic on chain. You can offer an online casino or gambling experience that has basically no house rake. It's almost just provably fair. You actually have stable coins, so you don't have to do some crazy tokenomics kind of thing. And we've done a couple bets in this space as Dragonfly, and I think those are some of like the best performing companies in the vintage. And I think similarly they're kind of underrated because most VCs don't want to touch anything related to gambling, or I get sort of the optics of it, but when I think about it, I'm like, wow, this is a space that really has not had any innovation. There's sort of this government mandated monopoly in most scenarios, which inherently limits kind of innovation. And if anything, it's hey, a market that normally has like a 60% rake, and you're inherently like losing half of your value just by stepping on the floor. We can get that down to like 1% or less, and I think that ultimately is like good for consumers. It's kind of more money back in their pocket, and something that's more entertaining. And so I think there's a lot of room in that kind of space, and I think they'll probably get hotter over the next few years if I had to guess. I think areas that are overrated.
There's quite a few overblown areas in our sector, so I think
yes,
I defy you to pick just one.
I would say social is an area that we've never really been big on. Anything in the kind of like decentralized social space. I think one, having worked at a social network for a while, you see how difficult it is to like actually run a successful social network in terms of moderation, content curation, building an actual graph of users, and it's just really difficult to start from zero if you don't really have a great edge other than it's decentralized or it's on chain.
We have seen social make multiple attempts within this space, and I feel like this year was another boom, if we can call it that. But what it looks like in terms of the longer term sustainability of that model, you're basically saying I'm not sold.
I'm not sold on the current version of social when it comes to crypto. I think if something were to happen in the space, I think one, it's going to use sort of the sort of economics component of crypto, financialization component of crypto, to actually accelerate the growth of a new network. And you see, again, flavors of that in various different attempts, but I don't think they've kind of quite cracked it yet. Or I think it's going to be a totally new format that we haven't really seen yet. It's not going to look like Twitter on-chain or Instagram on-chain or TikTok on-chain. It's going to be something different. And I don't know what that looks like today, but I think that's almost always the generation of a new social network. Is it's not, we took this existing thing, we tweaked it slightly, but is a totally new format that just doesn't really fit into the existing paradigm, and therefore you can have sort of a totally dedicated surface for it. So I think that might happen in crypto, but I haven't really seen it yet.
So for my last question, and it's a slightly loaded one. If you were to evaluate Aptos as a core protocol and the ecosystem that exists atop it, what are the competitive advantages that you see going for this chain?
I mean, I would say, kind of like we've been talking about too, developer ergonomics and developer experience does kind of underpin so much of what happens in different ecosystems. And I really hear nothing but great things about everyone who tries Move, who's been building on Aptos. Everyone really loves the experience, and developers are kind of ultimately the lifeblood of any ecosystem. And it's great to have something that's high performance. It's great to have something that users also love using. But having all these different sort of components is not enough to actually get an ecosystem going. We always kind of say it's like you need content that kind of percolates into all the other things. You need your gold that's therefore going to like fund the bars and fund the jeans and fund the hotel. And I think every ecosystem struggles with this a little bit of just like, well, how do you actually get new asset issuance? How do you get new things that people want to buy or trade or use on chain? And then that kind of percolates into all the other sort of infrastructure that gets built. And so I don't think this is unique to Aptos, but I think Aptos is certainly set up to be able to catch that when it happens.
Well, thank you so much for your perspectives. It's been fascinating to learn about the VC perspective because I think you guys very much have a top-down view of everything that's going on. And let's see if some of your bets play out.
Thanks for having me.